Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, February 4, 2015. Daily chart of the SPY, and we have our semi-triangle pattern drawn in here. And I've actually moved the trend line to coincide with this bottom here, which is now just about at the 200 period moving average, which is moving up by the day. And so what we have in the triangle pattern is we had a test of the line, right, this morning, and then we pulled back, and then at the end of the day, the market sold off. And that's a little bit of an ominous sign. We don't know exactly what to make of it yet. It could just be a normal retracement from this rally here. We could go down for another day or two and fill this gap here potentially, and then proceed upwards, or we can come down to this bottom line here, and then we have another decision point to make, because either the market's going to bounce off that trend line one more time, or it's going to break through it. And if it breaks through it, you're down in this area here at 191, 192. And if you are by chance down here, and we'll know it when we get there, but if you're down here, there's about a 95% probability that you can whip out your checkbook and start buying everything in sight, because I think that would be a low for a while. And I think we would have a thrust off the bottom here, just like we did here. However, when we get there, we'll talk about it if we get there. But right now, we're in no man's land. That's the problem. I can't even tell you which way the market should go tomorrow, because, yesterday and the day before, from here to here, I said tomorrow, meaning today, could be a pause day. Slightly up, slightly down, but normally you'll find somewhat of a non-eventful day, and that's pretty much what it was shaping up to be anyway. And then at the end of the day, when we sold off, it looked a little bit suspect. And if you go over to, like, for example, the hourly chart, all right, this big red candle here is not helpful at the end of the day, in the last hour of the day. However, there's nothing to say we can't come into the 20 period, which is the red line, or the 50 period moving average, which would fill this gap at 202 and a quarter roughly, and then proceed higher. So we'll have to see what tomorrow brings. I know a lot of folks are talking about Greece and all that stuff, but we've been down the Greece path before, and it never really amounts to anything. Greece is more of the excuse than the reason. I go with we hit a cycle bottom here, and it's good for a 2 to 4 day rally, and we had 2 days, a pause day. There's nothing to say we can't have another pause day and go higher. Who knows? There's really no way to tell exactly which way we go. I don't have any kind of a turn scheduled for tomorrow. There's nothing to tell me the market's going to go up or down tomorrow. So anyway you're playing it, if you are playing it, it's more of a guess at this point, leading into tomorrow than anything else. The Globex session after hours on the S&P E-mini contract is down about $5, and we're down at about 2024 and change. And we'll have to see what happens. Now, if this level hit this morning and we finished up on the day, that would be a whole different picture. That would be very bullish into tomorrow. But the fact that we sold off at the end of the day leads me to believe that anything goes. I'm not going to say there's downside or upside. It's just anything goes. So we'll have to play it one day at a time, and we'll get a picture of what's shaping up tomorrow first thing in the morning. Okay, let's go over to the IWM for a second, because when we want to look at our favorite indicator, okay, there's a reason, because IWM did pretty much the same thing, but if we look at the hourly chart, all right, you'll see that it did mainly the same thing, but we're coming into a lot of support here in the IWM. We're coming into a 200 period moving average on the hourly chart. We're coming into a 50 and a 20 converging at the same time at about 11760. So, the IWM has been strong. This is a bullish pattern. There's nothing wrong with this market. It's still in an uptrend. And it just looks like the IWM wants to go higher. All this consolidation above the 200-period moving average, and especially when the market stays above the 20 and the 50-period moving average, is bullish. So I'm keeping my eye on it. It was down a little more than the S&P today, so I always take note of that. But we'll just have to play it one day at a time, one tick at a time. Okay, let's go over to the USO. This one's a little more fun because we do have a read in this market. And what happened was we had a low here, and I said, you can play this if you put a close below the low of this day here. You can take a ride up because we were scheduled for. I don't want to say we were scheduled for a bottom, but we were certainly hit the number that I had calculated at 43.70. We went down to 43.58, and then we shot higher. And then we had a 3-day rally, and I remember yesterday telling you that today would mark a cycle top in oil. And your two levels were this pivot high here on the USO, which would be 1936. And I said if we went through 1936, then you would look for this level here at about $20. Okay, and where did we go today? We pierced through $20 and reversed away. And then and basically that was yesterday. And then the market took a nice bath today and retraced about half the rally from these 3 days. So the cycle top did play out, and we're happy to see that. So what's next for crude oil? Basically, crude oil may be weak for a little while longer, may chop around. I don't have a definitive turn coming up tomorrow, anything like that in crude oil. But I don't think an ultimate low has been put in crude oil, but this was what we called a short-term or intermediate-term low, and this could consolidate for a while and go higher. I mean, you could get up into this 21, 25, 21 and a half area in the USO, pierce through the 50-period moving average if you get some sideways days going here, but you'd have to have a week or so of that going. So we'll take it one day at a time, and we'll just play it by ear. Okay, gold market. What do we have in the gold market? GLD had a little pop today. Gold futures were up a little bit today. I think about $7 or $8, which is fine. We're chopping around here. I think that I do have an indication this week for 1245. Now, the market's got to really close the day below 1259 in that ballpark for us to go down to 1245. And these are just mathematical calculations, including time cycles. And, the cycle work with the time factors is what gives me my turn dates and also my target numbers. And the gold market and the oil market, not always, but tend to be a little more precise at times than the stock market. However, so with the gold market, excuse me, I'm looking at, as long as the market stays above, let's say 1260, it's really in a favorable position. But if we close below 1259, 1245 is going to happen, and that could happen this week. So we'll have to take that one day at a time. All in all, I don't have like a lot of indications for tomorrow on which direction many of the markets will go. And I think that's mainly because we had 3 solid up days in the stock market. Today was deemed a pause day. And same thing goes, the gold market kind of played out to the downside, played out to the upside. And then the oil market put in the daily top, and we reversed off that daily top. So now we have to see the market get its footing and establish a pattern. And then as the time cycles, as the time factors begin to culminate again in a few days, we'll see which direction we can pick a market to go. All in all, this year has been pretty volatile. So far, the month of January was very volatile, and I think the month of February should calm down a little bit in terms of the whippy action, but we first have to see that take place. And one day at a time, we'll update each and every night here on what I'm seeing. So I think that's it for tonight. Hopefully it's helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.